Hey gang, this is Mike with my Real Estate Dojo. 4 reasons why the next crash is going to be a subject to heaven for real estate investors like yourself and like me. Now, for the people that don't know what a subject to is, it's basically a creative financing strategy where you're able to buy rental houses, fix and flips, whatever, real estate properties without using your own money. Yep, you heard me right. So again, a subject to strategy is a real estate creative strategy where you're able to buy real estate property without using your own money, without using credit. All you do is step into the seller's shoes and take over their house payments. And that's called a subject to. Now, some of you may say, hey, does this work? Is this legal? I've done tons of videos. I've done tons of case studies where I've actually bought properties in the crash of 2007, fourth quarter, 2008, and then rented it out and sold it. And I showed you guys my HUD-1 on my YouTube channel, on my Facebook. So go up there and research it. But coming to the story of this topic for this video, 4 reasons why when the crash happens, it's going to be a real estate heaven for subject to real estate investors like myself or like you. So normally I freestyle all my videos, and I've also freestyled this video, but I wanted to write down a couple of points because I just did a Facebook Live and I missed a couple ideas and I got tons of people asking me questions. So I want to go and do a in-depth video that explains exactly why I say there's 4 reasons why the next crash is going to be a subject to heaven for real estate investors like myself, especially if you're a buy and hold investor. Okay? All right. So the number 1 reason is that when this crash comes, it's going to be a subject to heaven for real estate investors because it's going to be massive, massive cash flow. Okay. What do I mean by that? When the crash does come and you buy a property subject to and you decide to rent it out, you're going to get mammoth cash flow. Let me give you an example. 2007, fourth quarter, when the market crashed, 2008, 2009, I was buying subject to deals for my own investment portfolio because I'm a buy and hold guy. And all of my sellers that I took over their existing loan or took over their mortgage or did a subject to or a wrap strategy, every single one had 6%, 7% higher interest rates, okay? And even though they had such a high interest rate because they had bought in the pre-bubble crash, I was able to turn around and rent these properties out for a minimum of $200 a month, usually a lot more, $400, $500, etc. per property. And again, let me remind you, this is at 6%, 7% interest rate that the seller had with their original bank. Let's say Bank of America in this case. Okay? But today, when the crash comes, all these people that are going to lose their homes in the bubble are going to have ultra low, listen again, ultra low interest rate. They're going to have like 2%, 3%. And so what does that mean for you and me as a subject to an investor? That we're going to get mammoth, big, humongous cash flow from these properties that's unheard of because their original seller's underlying loan or mortgage is 2 or 3% interest rate, okay? So it's going to be humongous, okay? I want to make sure I don't miss any points for you guys, okay? So the number 2 reason why that to support my massive cash flow idea is that inflation. When we go into any kind of depression, the Federal Reserve, they do quantitative easing, which is basically printing out money. And that by itself increases gas prices, food prices, rent prices, and that's why people say the rental business is a hedge against inflation. Let me give you an example in my own life. I had a property in Lancaster. When I first bought it, I bought it as a subject to my PITI, which is principal, interest, tax, and insurance, to the seller's lender was roughly about $450. Now guys, I don't have paperwork in front of me, I'm just giving you a rough estimate. I might be a couple of dollars off, but I'm just rounding it off to make it simple. My rent to that lender was $450 for this Lancaster duplex house that was 2-bedroom, had a garage, back door, was pretty good. Okay, I turned around and I rented this 2-bedroom out for $650 when I first bought it. And as the crash continued, and as inflation, the Fed's printing out more money, inflation came up, that same unit right now, today, I'm renting that unit out for $950. So from, let's say 2008 or 2009, I don't remember what exactly year I bought that in, but just like in the past 4 years, it's gone from $650 to $950. So $650, $750, $850, $300 increase. Now, that's the facts. And when the crash will happen down in the future, the Fed's gonna print out more money. So another reason why it's gonna be a massive cash cow is because of inflation. When I just giving you an example where I used to rent the house for $650, now I rent it for $950, same thing's gonna happen. But what's gonna happen is you're gonna have this inflation on top of this massive low interest rate that you're buying them subject to, which now it creates two stress points, if I can say, to increase fat wattage in your pocket or in your back pocket, wherever you keep your wallet. So the reason I say it's massive cash points, number one, I talked about is low interest rate. Number two, I talked about inflation. Okay. And to support the massive cash flow that you and I are going to get for landlords when we buy subject to in the next crash, it's going to be harder for buyers to get credit. Therefore, if you look at that 2008 crash, 7th crash, you notice that lenders tighten up even after they got their bail money from the taxpayers like us. So what that means is there's going to be a bank credit crush. The average person, retail buyer, is not going to be able to qualify for a loan. They probably are not going to have any money to qualify for a loan because, you know, majority of people are going to lose their homes and they're going to have money in stocks that's going to crash. And I'll get into that a little bit later, but we have right now at least 3 different types of bubbles: the real estate bubble, the stock or Dow, or the bond bubble. So a lot of wealthy people have their money in stocks, which they're gonna lose. And I'll explain to that a little bit later, but just come back to the story. There's gonna be less credit out there for people to buy new homes, which means that many people are gonna start fucking renting, which is gonna push the rental price up because of demand. And then you have ultra low interest rate that, you know, we bought the property ultra low interest rate because the previous seller bought it in a time where the Fed had interest is all-time low. And so those 3 things contribute into that massive cash flow that me and you're going to receive by buying subject to properties in the next crash. That's why I call it the crash heaven. Okay. The next reason why it's a massive cash cow is that during the crash, a lot of the lenders did what's called loan modification. And there's so many other people that have even lower interest rate, you know, than whatever the fair market is, because they did loan mods. And these people's interest rate might be 1%, 2%, something ridiculous, okay? So again, that contributes into you and I getting massive cash flows because we're going to be able to buy properties subject to, like, have already done loan mods on them, ultra low interest rate, thanks to some of the programs Obama had to bail out the people. Now, the next reason why it's going to be a massive cash cow, guys, is because the simple economics, which is supply and demand. A lot of people are going to lose their homes. A lot of people are going to lose their jobs. A lot of people are going to lose money in the stocks. So they're going to need a place to live. And they're not going to be able to get homes because credit crunch is there, and the lenders are not providing loans because they just lost a lot of money. And so there's going to be a big demand of people that want to buy, not buy, but rent properties because they can't buy a home or they just lost their home. Therefore, you and I are going to make shitload of money in cash flow because, as I explained to you, we have ultra low interest rates that we're going to buy the property subject to, inflation kicking in, credit crunch, loan mods, and people losing their jobs or homes, and now they need to rent. All these 5 points are going to just focus into rental comps keep going up and up and up in the crash. That's why I say the next crash is going to be the subject to heaven for real estate investors that are clever investors, not the average investor that goes to the auction or the average investor that hires a realtor and they bid on HUDs. I'm not talking about those. Okay, I'm talking about using creative financing where you don't use any of your own money, you don't use any of your credit, for just a couple of grand. You take over the seller's existing mortgage and you just step in their shoes and start making payments. And what you do is you got to do some hard work. You got to babysit the property. You got to get renters in there. You got to do eviction. You got to qualify them. You got to babysit them, and you got to fix ACs. But in 4 to 7 years, each of those properties will give you at least equity cash out of like 60 to 100,000 from what I've done the last crash. Okay, not including the cash flow, just from the equity cash out. All right, so I'm going to go to point number 2, why the next crash is going to be a subject to heaven for real estate investors. So the second reason why it's going to be a heaven for real estate investors that use a strategy and subject to is because the easeability of getting a deal. Okay, so again, it's going to be so easy to get a deal. Let me run through some of the reasons why I say this. 1, every newspaper, every TV that you watch, they're going to be talking about how the real estate is down, how, you know, foreclosures are all-time high. Because if you look at the last crash, 2007 before 2008, all the media were shouting out how you lost equity, how, you know, there's so much foreclosure. So what's going to do is it's going to create a panic with the average home buyer. Psychologically, they're going to think that they've lost equity, even though it's a phantom loss, even though it's a paper loss. So they're going to just run out and start selling their property, some of them. Other of them will just lose their jobs because of the economy crash, and they're not going to be able to make payments. Other ones are going to have, they're very wealthy, they have shitload of money into the stocks, but again, once that bubble crashes, they're going to lose shitload of their fucking money. The ultra rich, they're pretty rich, they're going to lose money. And so that's why I say that in the next crash, you're not going to only be able to buy entry-level homes like last time, because the last bubble was prime, where people couldn't qualify, they didn't have proof of income, that, you know, basically they scammed the poor people. But this time, the Federal Reserve and the central banks, they're going to scam the rich people. So in this next crash, you're going to be able to buy mega mansions and mansions for fucking subject to deals if you want. And you can find medium level properties if you want. You can also find entry level deals. So the next crash is going to provide you a variety of motivated sellers, from really rich that had 10 million, 20 million in stocks, all the way down to Jose that got a subprime mortgage, or Bob, or whatever. You know, does that make sense? Because we're actually heading towards, again, subprime lending. Because if you just watch the news, they're talking about, you know, if you have 520 credit score, we can help you out. Or just listen to the media, okay? And in the commercials, they'll tell you where we're heading to, okay? So coming to point number 2, why the next crash will be a subject to heaven, is because the easeability of doing a deal. So number 1 reason because is TV and media and the newspapers are going to be advertising that, hey, the market is shitty, and people are going to believe that. Number 2 is going to be the herd effect. Just like cows, just like any kind of herd, people are going to hear the news, they're going to drive down their street, see Bob selling their home and Sally just went to foreclosure, and they're going to do what the herd does, which is basically, even if they don't need to sell their home, they're going to think, oh shit, I've just lost a significant amount of money in my home, I'm making big payments. I need to just go ahead and sell it before I lose more money instead of holding on to that hard asset, okay? Because of the herd effect. The next reason why it's going to be so feasible to do these deals is because there's going to be massive inventory, guys. There's going to be people losing their homes. There's going to be people that lost a shitload of money in stocks, retirement that have to downsize. So there's going to be massive inventory. There's going to be motivated sellers. There's going to be bank foreclosures. There's going to be REIs. There's going to be a shitload of inventory, okay? All right. The other reason why it's going to be very easy to do deals in the next crash is because everybody and their mama is going to be running away from it, okay? If you look at 2007 fourth quarter crash, 2008, 2009, all the realtors that were doing real estate, they went out and got jobs becoming receptionists, becoming attorneys, going back to school, because being a realtor sucked during those times. All the investors that you see right now on Facebook, on YouTube, they're talking about their wholesale, this deal, they flip this deal. Dude, sorry baby, it's not hard to do deals now, right now. Everybody and their mama can do deals, okay? So all these people are gonna be closing shop and leaving the business. If they're investors, if they're realtors, and that's why it's gonna have less competition. Only for the true people like yourself and me that are fucking in it for the long run. We're gonna just come here and just hit home runs because we're gonna buy at the crash and sell in the bubble like happens and stuff, okay? And the last reason why it's gonna be easier to get deals is the mindset of the people. Again, people are gonna see it in the news. People are gonna drive down the street. Their friends are going to be talking about them selling their home, they're losing the home, the economy's going shitty, and the mindset of the sellers are going to be shifted from, oh, my house is worth something, to like, oh shit, this is a big liability, which makes it easier to negotiate, per se, with the motivated seller, okay? All right. Now, let's go to my next point, which is point number 3, why the next real estate crash is going to be a subject to heaven for real estate investors, is that there's going to be less competition, guys. And dude, it's going to be less competition. I don't know how to explain it. There's going to be more inventory and less people because the inventory is on fire. The media is telling everybody to run away. The media is saying the real estate is shitty. The taxi driver is saying it's shitty. Uber is saying it's shitty. Your hairstylist is saying it's shitty. And there's going to be massive inventory. And all the investors that were doing fix and flips, they're going to run away. The home builders that were just building property and the developers are all going to dry up, and the lending's going to dry up. And what that happens is there's going to be less real estate investors like me and you that are willing to buy subject to properties. So, man, that's why I say it's going to be the fucking heaven, because there's more inventory. Everybody's running out because they lost money because they're doing deals right now. Right now, it's not time to be doing deals unless you're wholesaling them, which basically means you just put it under contract and you're selling your positioning. But if you're trying to buy properties and doing comps in today's market, you're getting fucked, dude. You're gonna get fucked. I don't know how to say it, but in my heart of hearts, I believe that you're gonna get fucked. All right? I'm sorry to tell you that, and you think I'm crazy, but let's let time look. I hope that doesn't happen to you. But this is the worst time to get in real estate, man. Everybody's telling you get in real estate. Everybody, you know, or get in stocks. You look at the news, there's growth. Everybody's developing. Everybody's doing this. It's the worst time, dude. This is the worst time. This is the time to cash out. And the bubbles is time to cash out. And the depression and the recession is time to buy, dude. It's as simple as that. So, the fourth reason why the next bubble is going to be a real estate heaven for investors like myself that use creative financing is because there's going to be all types of homes out there. There's going to be all types of motivated sellers out there. I've kind of hit on that a little bit earlier, but let me go and explain a little bit more. In the 2007-2008 crash, there was all types of sellers there too, But the majority of it, the big percent of it, I don't have the percentage, but I would say from my interaction in Dallas-Fort Worth with the sellers, I would say at least like 70% to 65% were lower level. There was some middle level and there was some really rich level, because I talked to like lawyers, doctors that had mega mansions in Plano, Uptown, that lost a lot of money. So, but this crash that's coming up, it's not going to be like the last bubble, because the last bubble, majority of it was the name blanked out, but there were buyers that weren't qualified. There was buyers that didn't have docs. There was buyers that didn't have proof of funds, that that didn't understand adjustable mortgages, and just not qualified buyers. The bankers came up with a plot scheme to suck their down payments and rob them, like they've been robbing everybody with their fucking fiat money, dude. Okay, and the way they cause bubbles and crashes. But last crash of real estate was prime, what they call prime people, majority. But this crash, see, like the prime people, they already robbed these guys. Now what they're trying to rob now, the Federal Reserve, is the middle class and the rich people. I'm not talking about the ultra rich people, the 1% that run America, but they're trying to get the rich people and the middle class now. And the way they're going to get the middle class and the rich people is the middle class, they're getting them from their retirement plans or pension plans or 401k, because these guys are just putting their money into mutual funds, okay? And the rich class, okay, not the ultra rich, the people that rule the world, and, I'm talking about the rich people, they have the majority of their money into stocks, okay? And as you know, stocks is an all-time high, bonds all-time high, real estate's all-time high, and there's multiple bubbles right now. So this time, what they're gonna do is, the Feds and the central banking system and the elite, they're gonna rob the middle class and the rich class. They kind of robbed the middle last time, but now they're gonna get the middle and rich this way. And I just showed you what investment platform they're gonna rob them at. But what does that mean for me and you as a real estate investor that uses a subject to strategy? Is that this crash, we're gonna have all kinds of homes, dude. We're gonna have really nice middle class homes between this range, and also amazingly rich homes, dude, that what I call mansions or mega mansions or whatever you call them. Okay, 4,000, 10,000, 20,000, depends what part of state you're in. So you're gonna have these wealthy people becoming motivated sellers, okay? So the next crash is going to give you a variety of houses to choose from entry low-level homes all the way down to the ultra-rich level. And some investors like that because A, they could buy the nice-ass homes for themselves. For example, if you want to buy, let's say, a $5 million home and you have to get a conventional loan, you got to put 20% down. Well, in a $5 million home, you have to throw down, you got to put down $500,000, okay, at the very minimum, okay. But if you're an investor and the market has crashed and the same millionaire lost so much money in stocks and he doesn't have the dividends coming in to pay his mortgage on this fucking $5 million home, and he's just lost so much money, and he's been listening to the news, and he's been just bam, 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 all beat up. He's like, okay, instead of you wanting the world, he's been psychologically brainwashed from the media, from the hits to the body, that he's gonna now wanna maybe give it to you for 25 grand. If you give him 25 grand, he's willing to just give you the deed, okay? Maybe he'll give it to you for 50 grand. Maybe he'll give it to you for 100. You know, he's broke now. He had all this money, he had this dream home. He lost everything. And if you say, hey buddy, I'll give you 100K, just let me take over the payments, he may do it. Where he had to put in 500K. See what I'm saying? And the great thing is, you give him 100K, and now you have this $5 million home. Well, it's not under your credit. It's not your liability, which is very, very powerful, especially the way I teach you how to do it, where you set up a non-recourse loan. And which means that's really good for your credit. Your debt to income ratio doesn't change. It's not lowered. And so it's really good for you. And you're basically allowing that seller to co-sign for you in a sense. He's not co-signing for you, but in a sense, you're using his money, you're using his credit, and you're only going to give him 100K, sure. But if you would traditionally to get a loan for this exact house, you would have to come up with $500,000 plus do all kinds of qualification, proof of funds, income taxes. Where with this guy, you get to have a kitchen table closing. You can close at your title company. You can close at your attorney's office. So it gives you a variety of options to getting to the big leagues if you want, as an investment or just buy it for yourself. Some people, they've been doing deals, and now they want to buy a $5 million home. Instead of going traditionally, they just wait for the crash to happen and buy that $5 million home for a fraction of the cost, without using their credit, without coming with all the paperwork and all the customary dances you gotta do to get a fucking house at that level. Okay. So I just gone over. I think I lost my piece of paper, but it's all good. Four reasons why I mentioned that the next crash is going to be subject to Disney World for real estate investors. It's going to be the subject to Part D. It's going to be where fucking immigrants like me that can't spell, can't read, come to here as a refugee, all that shit, we're just going to go up, because I put significant amount of time and energy in the most important asset, which is my fucking mind, dude. Nothing else matters, because in the society we live in, things are changing so fast that you have to be able to be learnable and change. And if you can't do that, you're gonna get knocked out like Kodak did, or get knocked out like GMC after being in business, or Ford after they had to file bankruptcy, and then we had to bail them out. It's just ridiculous how these big companies, they're the revolutionary, and then they go bankrupt because of growth and death. So that's why we're in a situation right now we are in. But the next crash is definitely going to be a great opportunity if you guys understand subject to. If you don't understand it, guys, holler at me. I have my master's, dude, in subject to, dude. That's all I do. There's all kinds of investors out there. Some of them do auctions. Some of them do HUD. Some of them do REI. Some of them, whatever, right? Tax, this. But all these guys got to come up with their own money, or they have to get into debt, or they have to borrow the money from hard money lenders. What I have came up with is called the alchemy of real estate investing. I'm able to turn nothing into something. I've done it multiple times in my lifetime as a refugee to America. I started my first business with $100, doctor move, that I recently closed down. Was been in business for almost 15 years, dude. Made multiple $1 million from that. With $100, never borrowed any money from the bank, didn't put any money on a credit card. So these other guys are smart people. What do I mean by that? And I'm going to do a video about this. But for example, I just sold 2 real estate, okay? And the people that I sold it to were very smart people. They were actually investors that one of them had money, but they both had to get money from a bank. They were one of them was a realtor, broker, and very smart, and they have rental properties. The other one was a fix and flipper. But even though they were so sophisticated and they had all this money and all these connections and all these experiences, a refugee like me that can't spell, that can't write, guys, came up and sold the shit to them, made thousands of dollars from them. I bought the property without getting a loan. I got the fucking property without having anybody run my social. I got the fucking property without showing any documentations. And, I got the property whenever I wanted to get it. I didn't have to pay all those fucking junk fees like most people do at the title company. I didn't have to do all the little dances these guys want me to do. I didn't have to do any of that shit, dude. I was in total fucking control because I read books and I learned from my mistakes and by going out there and taking actions how to create a win-win situation where the seller won, I won, and they were able to just give me their fucking property. And I bought it for like $10 or $1 or something like that. And then I rented it out for 4 to 7 years, depends on which property. And then when the bubble came, I cashed it out. And on one property was rambling I put it on my Facebook. You know, I made $66,000 in just equity, dude. Equity cash out. I didn't even include the monthly cash flow from the renters that I got for the amount of time that I owned it. So simply put, I made $100K plus on each fucking deal. I sold one in Grand Prairie, sold another one in Grand Prairie, sold one in Dallas. I bought all of these properties using my imagination, using a technique called subject to a wrap. Or the other investors that I just talked about, the HUDs, or the investors that bought my property, they were very sophisticated, they were very, very smart, and they're gonna make a shitload of money. They're very smart people. But even though I'm not smart, I wasn't the one that sold it to them. They went the traditional way, the way that everybody says you hire a realtor, you go to your bank, and I went the other way, and I'm the one that really made the most amount of money because I bought it when it was in the Depression. These guys, both of these investors, they probably weren't doing deals when 2007 crash, 2008 crash, because they couldn't get funds. No bank, no hard money lender probably would lend them. Two, psychologically, they weren't hustlers like me, dude. They weren't willing to run into the fucking fire, dude. Okay, what did they do? They probably, I don't know them, but they probably did what everybody else was doing. They listened to the news, they listened to the media. Everybody's doing good, everybody says real estate's hot, so they went and did this, and they probably done deals and have experience, but when everybody was running right, they went right with them. That's the point I'm trying to make. These are smart people, okay? They're not dumb people, dude. All of them close very quickly on my properties, but again, when everybody's going right, they went right with them. I was the guy that went left. I went right into hell, dude. I went right into the fucking fire. I went right into where everybody told me you should not go. The media, all these fuckers. I went right into hell. I bought properties via owner financing using a strategy called subject to and wraps. And I paid the sellers hardly anything or sometimes some money for their equity if they had some or whatever. I learned how to manage them, acquired new skills from property management, screening, all this stuff, dude. And collect the cash flow, and then when the bubble came, I cashed out on these properties, dude. And when you ran my credit, now one of these properties came under my credit. So I did it all through creative imagination, guys. Now, if you want to learn some more information about that, let me know. Leave a comment. I'll be happy to help you out, guys. I have tons of free videos online on how to do real estate investing. And guys, I don't sell you shit. This is my sole purpose, is to change you guys' lives so we could all have a better fucking life and help you guys awaken, because the more I awaken, the more I can awaken you. And it's just love, dude. I do it for love. If you like these videos, please like, please share, please comment. Tell your friends and family about me. See you later, gang.